Question. So what do you think on today's market, Marion? What obviously four dojis in a row. We covered it pretty well in the
Well,
recap last night. What's your call on today's tape before we actually get into some individual stocks?
well, this is an awful lot of indecision in the market. All we have is wicks for the last 4 days.
Yep.
That's
Let me add to that for 1 second because I got a few emails last night. I actually said the same thing, and obviously we discussed that in the game plan last night.
well,
And somebody said to me, "How is it indecision if we gapped lower and stayed lower?"
because we might be gapping lower, but nobody's doing anything.
Right. I think the query that I was getting was, well, you're saying it's indecision because it opened and closed at the same place, but everything closed lower, and they're basically saying it's not indecision because we gap lower, stayed there, and there was a big net change. And I think what we're trying to say is, yes, there was a gap lower, but nothing changed after the gap.
Right. And it's not like it gapped on a huge amount of volume either.
Right, exactly. 150 was okay, but that's not really one of
Right.
those days like we've had on the other down days over 250 million. So you're absolutely right. It was 100 million shares less than the other days when we sold off.
Right, right, exactly. So I still say it's indecision. People are waiting to see whether it's they're waiting to see what the rest of the market does because I think at this point we are in a range. And I think the traders are waiting till we get out of the range.
I agree. So the way I'm seeing it right now is I agree 100%. We're actually going to kind of open up right into that level, depending on exactly where you draw it. I kind of feel like, again, other than the spike higher on the FOMC and other than yesterday's gap down, we almost closed back in there. It's almost 3 weeks to the same price. So, we talk about this with a lot of uh, passion when we're looking at other individual stocks, basically saying if it's in the, again, I'll always say it from my back, if we're trading in a room together and you call that stock out, I would say let it get out of there first, because then the reply usually comes back like a bid support and short sell resistance if we're claiming this is a box that is going to hold. But then the answer to that is, well, is that your best buying opportunity to buy that bid? Is that your best sell short opportunity? The answer is no. You'd be looking for stocks that were in downtrends that have room to go. That could be a last resort if you're looking to find something to do, but always have to quantify the levels of probability, and is that the best trade on the board, for lack of a better way of putting it. And look, we always start out with the market, just so everybody understands. There's always a stronger edge to your trading when the market's obvious and you're trading stocks in sync with the market. It's basically like there's more money doing the same thing. That's an oversimplified way to say it, but it's absolutely the truth. And when more money's doing the same thing, your conviction level can go up. You can hold stocks longer. You're not going to exit on slow pullbacks or maybe one candle pullbacks. Maybe you're going to add to positions. And even if you don't add or get shaken out of a trade, it might just mean that you hold it a little longer, or maybe have more positions than you might normally do. So just to give everybody context, we never want to just say stuff for the sake of saying stuff. That's not the point of these meetings. The point of these meetings is to help give everybody a really well-rounded concept of how to create good trading ideas that translate into trade management. So we're basically saying right now, Marion, and correct me if you agree or don't agree, we're basically going to the market first to say if we have a bias, which will give some juice to the individual stock trades we're looking at.
Right, exactly. So if we have a bias to the upside, then our longs, you can hold longer and get more size in it. If you're going short, and we had talked about something in the recap where it was counter the market, then I think you have to be a little more disciplined, a lot more disciplined. Yep, I agree, William, and that's what concerns me.
Yep, I
Yeah.
actually, I
And
mean,
that,
go ahead, I'm sorry.
right, that volume shows that there is no institutional participation, and that's what you need.
Actually, that was actually another email that I got yesterday. It was somebody asking me, "What do you?" Because we actually tried to explain it a little bit in the recap. I don't remember if it was last night or the day before, America, because we constantly mention institutional sponsorship and whatnot. And somebody actually said to me, "Well, that seems like it's a gut thing," and I'm like, "No, it's not a gut thing. It's our stocks moving higher and then holding higher with consistency, or our stocks moving lower and moving lower with, in other words, you like, remember the other day we were talking about Amazon, and this is probably in the 9:30 meeting. Maybe I could pull that up on a intraday chart. This is actually a good example of it. I think Paula is probably the one that trades it the most, but we were talking about this type of price action here the other day where it was going up, and especially the first half hour where I think there was like I keep saying I think, and I'm literally looking at the chart, a $5 sell-off and then a $7 rally and then a big pull. When there's institutional support, meaning not necessarily bidding support, but support meaning there's institutions supporting the bias of the stock, whether it's a bullish bias or a short bias, or a let's not call it a short bias.
How about it's more like participation, institutional participation?
Yes, much better word. Yeah, support is kind of the wrong. It gives traders the wrong thought process there. But yes, institutional participation. This will not happen when there is good institutional support. So you should be, I said support again, I apologize. Participation. You should be looking for stocks that have participation with consistency. And that's what we're trying to get across to everybody. So when you do your game planning, unless again, let's just say for argument's sake, you do what I have on the screen here, you can, might or might not, either way. However you determine you're noticing whether a stock is in a solid uptrend or downtrend, you're literally looking for consistency to the institutional support. And when you see that, you will get better trades that translate into easier trade management. So, that's actually a very, and again, my English teacher would kill me on this. It's an under-discussed topic that you don't really understand in trading until you actually have a trading plan that you believe in. Because one of the biggest frustrations for new traders, especially, again, proprietary traders who are coming into the business that are sitting in front of a screen all day, and there's the pressure of doing something with everybody all over them, in the room talking about trades and whatnot. It's common to hear I'm getting bounced all over the place in my ideas. I want to be long, and it goes up and it goes down. That trade management and that trade experience is a function of picking bad ideas. And there's no other way to say it. And again, we're into challenging tape right now, so we have to give it a little context to that. However, the better job you do as a trader to notice when stocks have consistent and obvious institutional participation, you will find it less likely that when you get into positions that they will move against you quickly or shake you out of trades. Because when you do a good job of picking the right stocks and only trading the correct side of that stock, trade management becomes easier. So if I could just use this as an example here, this 4 weeks in Amazon, that was 4 weeks of obvious trading action, and then nothing, and then only 1 week, and then nothing, and then 2 good weeks you could have traded it. So do you see why I'm harping on this? Because having a game plan and listening to the meetings and scouring all night for charts, like I'm sure everybody's doing, it seems like I have some really hard workers here in the room with us. Except for one person who I think is extremely lazy. No, I'm only kidding. I'm just This is what I'm talking about. And actually, if I was you, I would definitely print out this chart of Amazon, because I know Tricia and Carmine and a couple other people, as prop traders, you want to be able to recognize this stuff where, okay, that was 4 weeks of something was going on and it was obvious and I should have done better there. And you want to say to yourself, what did I do right during that period, and why why didn't I see it during that period? And that is a crucial part of your trade management, because then you go into the market and look, Marion, I know you and I are very open about like trading scars. There's a mental confidence level you want to get to as a trader where you're sitting at your screen and you want to feel like you know what you're doing and feel like you belong. And if you're taking mediocre scenarios, and let's say, again, let's just use this because in my opinion this is a perfect chart. If you're trading too much of this on your, and this is a weekly chart, just to give everybody an example. If you're trading too much of this, you're going to end the day every day at 4 o'clock, 4:15, and you're going to be like, what is going on? Why can't I find a good trade? That's why. You're trading too much of this and you're not noticing it, and you're not trading enough of this and not noticing it, and you're not forcing yourself to trade more of this, and you're not paying attention by trading too much of this. So that's a crucial thing to learn as a trader, and here's why in the long run it matters. The more of this you trade, the more your confidence is going to be shattered. You are not going to feel like you know what you're doing. You're going to end every day saying, what is going on? I can read a chart. There's guys around me, girls around me who are buying drinks at 4 o'clock. I should be the one buying drinks. Why am I not down at, Stone Street buying drinks? What's going on? That's why. And again, trading is challenging enough. Get rid of this in your trading, because then when you get this and you're trading this, it goes up, it goes down, it goes all over the place. You're getting long, you're getting shaken out. And the reason for that is there's no institutional participation that's obvious here. You should have made money in these 4 weeks, so you're not over trading over here and feeling like you have to do something. And if we
let me add one more thing, that the longer you trade when institutionals aren't participating, you're getting whipped all around. When you get those good days, you're going to get out too early because you're so afraid it's going to do what it's done for the last week on you.
Oh, gosh, that's such an important point. And I could actually even add to that a little bit, if you don't mind. I often get actually, I should say, when I was managing prop traders, when I had my prop trading firms, I often had traders who wanted to switch time frames based on how the market was trading. So in other words, like they'll normally trade, off of a longer time frame. Then they're like, well, the market's a mess right now, so I'm just going to drop down to the 1 minute time frame, and I'm just going to time stuff off the 1 minute time frame. And I always said it back to them, almost exactly what you just said, Marion. I said, what's going to happen is you're going to get comfortable trading those 1 minute blips, and then when the market gets clear again, or your stocks get clear again, you're going to be exiting great trades that you normally would hold longer, because now you're in the mindset of, I'm watching the shorter time frame, and you're going to take a quarter when there's $1 on the table. So switching time frames is difficult too. It's also very important to stick to the same consistent time frame, because that's going to affect your trade management very much in the way that Marion just explained as well. You can't be I'm a base hitter, and then all of a sudden I want to be a home run hitter, and now I'm going to go hit base hits again. It doesn't work that way. It's very difficult to switch like that. So this is a really important conversation because because of this, because we're experiencing right now, and whether you say it's a 10-day trading range, whether you say it's 4 days of dojis, either way, there's not that institutional conviction level. Let's say, for example, again, obviously this was news, but it was clear. And we had, let's even say this year, there was 5 days clear, even though this is now still forming that trading range. You want to trade more of this. And when you convert weekly obvious bias with daily obvious bias, with hourly obvious bias, with change from the open, you start to formulate, gosh, I'm looking at great ideas, and my biggest problem right now is I'm not holding great trades long enough. That's where you want to get to, because when you believe you're good at doing that, meaning that whole scenario setup that I just discussed, and you're not seeing trades pull against you anymore, this mental switch goes off in your head where trading losses don't matter to you anymore, because you believe you could make money. And when you believe you can make money, small losses don't matter, because now they become a business expense. And the biggest problem you're going to have at that time is then putting more pieces together into the trading scenario to say, okay, what else can I add to this to add to my conviction level to hold my good trades longer? And that's when you really start to become a good, complete trader.
Excellent. William brings up a good point. Look at Adobe yesterday.
Yeah, exactly. Actually, there's the daily chart, exactly, and take a look at what that looked like on the intraday chart, having the right stocks in your list. So, again, we've discussed it over and over again. You have to, and if you're not in a 9:30 meeting with us, you probably maybe not understanding the terminology, but you have to work that keyboard of all the stocks in your list in the morning. It's imperative that you go into your list in the day and say, what stocks do I have long? What stocks do I have short? And actually, William called this out 2 days ago for everybody, and it's been in the list every day. So you have to get in there. It's not going to magically fall out of your keyboard. And, again, I'll just add one more thing to that, and I'll just pop this up for a second just to give everybody a little bit more of fuel to the fire, so to speak. Let's just say, for argument's sake, we have a day like we had yesterday where the market's gapped down, trading down. This column here, and I know I've discussed this before, but I want to keep bringing it up because it's crucially important. This column has changed from the open. So if you want to be long certain stocks coming into the day, and let's just say, for argument's sake, like on the blog, I have a whole list of stocks that are positive for the last 5 days, above the 20-period moving average, and up 2% yesterday. So if you go on the blog, there's a list of stocks like that right now. So those stocks are strong for the last 5 days, the last 20 days, and closed 2% higher on a day the market was significantly lower. So those stocks will go into a separate list, and then you watch change from the open in those stocks today. So they have recent strength, contra strength to the market yesterday, and then when they're trading positive from the open. So here's the point that I'm making. You could have 30 stocks in that list, but if only 3 of them are positive from the open and meet that criteria, which put them in the list in the first place, you're not looking at all 27. You're looking at those 3 as soon as the bell rings, because they're showing strength today in sync with the last 20 days that it's putting it in that list in the first place. So translating all of that data for coming up with great ideas to put into your game plan, and then translating that into how do I watch all of those stocks on the open, that's how you do it. You work the keyboard as well as having those sorts columns and the proper things in that stock watch to sort out which stocks you should be focusing on. Because let's face it, the answer comes back, so much happening on the open. How am I supposed to watch all this? That's how you do it. You first have the list of these are my longs, these are my shorts, and then you sort that column by change from the open, and it's sorting out all the possible stocks you could be looking at to the stocks that are doing what you want them to do right now. Because I get it all the time. You keep saying, how do I call the open? That's how you control the open, because now you're filtering down 30 stocks to only 3 that are doing exactly what you wanted them to do, and that stock was in the list yesterday. Long rant, and that's going to be a video this afternoon. Trust me. But that, Mary, all joking aside, that's what we want to do for everybody. It's one thing to have the ideas, but then you got to go into the market and say, I have my ideas. Now I'm going to make money with them.
Right. And some of the ideas won't work out and some of them will. You're just looking for the ideas that will work out.
Exactly. Like, for example, we had a lot of stocks that were bullish ideas yesterday that traded low. And quite frankly, we also had some bearish ideas yesterday that traded higher. Like, for example, we'll take a look at G-Pro. This was one of our better trades looking on the short side, for obvious example. And you're looking, and again, 1, 2, 3, 4, 5 weeks, 4 out of 5 weeks on the short side. So again, I hope I'm lighting up something in there for you to be like, wow, okay, that was obvious for 4 weeks. What did I do? Versus, now we got dojis all over the place. It wasn't obvious. So you can start to see how you put the picture together, clear downtrend, clear weekly closes lower. Now it's confirmed over here. The 20s below the 50, both of them are going down. I should only be looking for short sales. But again, it's got to be in the list and doing what you want it to do. G-Pro did not trade lower yesterday, so you're not shorting it. You're looking for stocks that are doing what you're supposed to do.
Right, and you're not getting long it either.
Right, exactly. In the long run, that is not a good idea. You're definitely going to have ideas. You can say, I could have went long. No, it wasn't a long. You let it go. Because you don't want to get cute where you're throwing behind the back passes and say, I'm going to get long and then I'm going to get short. No, have one bias for the day and trade that bias. Yes, there's going to be outliers. You're not trading the outliers. You're trading for what should happen most of the time. That's where confidence comes from. And William brings up a good point, too. There's nothing wrong with waiting the first 15 minutes. Absolutely. Let the dust settle. Get it. So now, let's say it's 9:45 and the dust settles on that first part of the morning. Now you have the opening price as a reference point, and you have the high and the low for the first 15 minutes. So now you have 2 really solid reference points out of the gate. So you come into the day with the bias. Now you have the opening price as a reference point. You have the opening 15 minutes as a reference point. You have the last price as a reference point. And you also have yesterday's high and low. So you have 5 or 6 different reference points to say, bam, the market's open, 15 minutes is out of the way. I got all these reference points. Now you're going to do tape reading, and tape reading is price moving closer to or further away from my reference points now? And that's where trading starts to become magical, and that's where you really start to feel like you have absolute control over what you're looking at. Now, I didn't say absolute control over whether what's going to happen next. You have control over what you're looking at, and that's where power in trading comes from, because now you're saying, I know what I'm looking for, and I can tell you if it's there or if it's not. And when you reduce trading when it's not there and be confident and don't hesitate when it is there, you start to really feel like you belong at your screen. The traders who get in trouble trade everything. They have no filter, both on the charts or in their trading plan or in their mind, to only trade something specific. And let's, again, a lot of you know that I run a lot of businesses as well. You can't be everything. I can't open a business where I'm going to do everything. It doesn't work. You don't have resources, the time, and all that kind of stuff. Trading's no different. It's hard to trade everything. Be good at something and then expand if you want to trade more. But be good at something first. And that's today's meeting. We'll see everybody tomorrow.